What's going on, guys? So, awesome day in the markets so far. What I kind of want to go over here, read a little something from CNBC. Okay, so Nasdaq rises 2% as investors shake off weak Microsoft outlook, Fed hike fears, right? So, U.S. stocks rose Thursday as investors shook off the weak guidance from technology. Whatever. Microsoft, we already know that. Worries about the Federal Reserve rate hikes. The Dow Jones Industrial Average added about 270 points. The S&P gained 500, and the Nasdaq Composite advanced 2.5%. Indexes, all three of them are coming off of two consecutive down days. So we're going through a little bit of a distribution. That's one thing that I kind of do want to point out. Coming off of the most recent lows in a lot of stock markets, and we're going to get into the candlesticks in just a minute here, but a lot of stocks were coming off of the bottom, right? So anytime you have a big move off of the bottom, you're going to get what is called a distribution cycle, right? So CNBC is not going to really talk about that. Your fundamental investor is not going to talk about that. Your average retail investor slash trader doesn't even know what distribution cycle means, right? But if you're you keep up with technical analysis, you understand technicals, you understand supply and demand, and you understand the moving averages, what you are going to understand is that anytime you have a big move off the bottom or a big move coming off the top, you're always going to get this area where there's a lot of choppiness. There's an area where the ranges contract and you get stuck in a range. They're up and they're down. They're down, then they're up. They're up, then they're down, right? Until you can kind of break over or below those levels, you really don't get those extended moves. So that's kind of what they're talking about. I mean, when they really say, down the last 2 days, realistically, we're not. We're over the 20-day moving average on the indexes, and we're looking actually really, really good. Now, if the Nasdaq was to lose that $303 area, we could be looking at more room to the downside. But let's continue here. The market is on pins and needles, they say, waiting to find out if inflation will come down and give us some, more information from, the Fed hike. That's why we have this choppiness, is what they say. It's a period of great uncertainty. Okay, Mr. Barry Bannister Stifel, chief equity strategist, said. So Mr. Chief Equity Strategist has said, it's a period of uncertainty. Okay, is it a period of uncertainty? Of course, right? I mean, with the way that they push everything through every news headline and every, up and down tick is monitored on a micro level, everything seems like it's a period of uncertainty. What I see from a technical standpoint, if you're below the 50-day moving average, you're bearish, right? And what did we do? We fell into a bear market. It's not that hard to understand that. You're going to get up days in a bear market. You're going to get aggressive rallies in a bear market. And then you're also going to get those aggressive swings to the downside. How about you just put all the noise aside and just follow the technicals? Once we can start reclaiming some of these macro levels of supply, the market's going to start moving higher. When should you start buying in if you're a retail investor, someone who's looking to trade for the long term? We kind of want to always average down on the significant red days. So like when we make a new weekly low, you kind of want to average down, but you don't just want to be adding every single day, right? Especially in a downtrend. But as we start reclaiming some of the levels of macro supply is when we want to start really getting more bullish on the stocks that we're holding, meaning that as we break the 20-day moving average, we want to add a little bit more for that run up and kind of take some little bit of profits on the way up. Now, if you're a pure long-term investor where your outlook is 3 to 5 years down the road, then obviously you're not going to be taking those short-term gains. But as we reclaim the 20-day moving average, you want to add a little bit more. Once we get up to the 50-day moving average, you kind of want to pause. And once we reclaim the 50-day moving average to the long side is when you want to add again for that continued move. And then you're really good because you're averaging on the way down. Again, not every single day, but you want to add in big chunks. So on weekly lows, new weekly lows, if we don't make a new weekly low, you don't average down. When we reclaim a weekly level of supply, you average back in. So yes, you're going to be buying some stocks a little higher when you could have bought them a little lower, but you always don't know in a bear market, in a down cycle, how much lower we can go. So that's why you just don't want to consistently add on every single down red day. But overall, good day. What I'm going to pull up is the candlesticks and kind of see what we're talking about here. If I do go to the S&P 500 here, I mean, this is a 5-minute time frame, absolute monster of a day, but we need to see the daily candlesticks. So as we look at these daily candlesticks, we're currently up here trading at around 416.55. That's this area where they talked about extreme uncertainty, right? So this extreme uncertainty, does this, I mean, come on, like we just got done getting over the 20-day moving average, which if you can see here, we haven't been over the 20-day moving average in almost 2 months time. So when we reclaim the 20-day moving average, which is this purple line on my screen, we put in another green day followed by a rest, right? Even the best marathon runner needs to take a break. Even the best marathon runner needs to stop for a glass of water. So as long as we were going to hold this 407 and especially the 20-day moving average of 401, as long as we're going to hold that, we're still looking like we're setting up for new higher prices. Now, that doesn't mean that we can't come all the way back down to the bottom of the range tomorrow being Friday the 3rd and then start to break below. But we know that if we do lose the 401, that's when lower prices are going to come. That's one thing I really want you guys to kind of keep your eyes on. If we can just quickly take a look at Microsoft, because Microsoft, you know, we really had that aggressive selling coming in the pre-market on Microsoft. But what Microsoft did today, going from red almost 10 points down on the day's session to completely engulfing that and going green, is extremely bullish. Currently back up to a price of 273.15 and up 75 cents on the day. We can kind of just look at the 5-minute candlesticks. I mean, look at the selling pressure when the guidance got amended. Look at the selling pressure. But one thing that I do want you to kind of notice here, right when the market opened, this candlestick here with a long tailing wick, this is bears getting trapped by buyers. Buyers stepped in. They said, you know what? Let's wait a minute here. We pushed us back up, and as soon as we got back over this 5-minute 20-day moving average here, it looks like the hedge fund algos turned on, and we've been on an uptick ever since. Very bullish going forward. I'm very curious to see what the market has planned. If you guys like this kind of video and you like this kind of content, make sure to subscribe. I release multiple videos a day on technical analysis showing us how to buy and sell stocks when it comes to day trading and even when it comes to swing trading and longer term investments. With that being said, my name is D. Anthony with Evolution Traders. I'll see you guys all on the next video.